this could be the future of money.
In 1 year, from nothing to a third of the market.
Hedge against a recession, physical, protected, hidden, decentralized. We haven't talked about that yet. There's more they haven't told you because...
Tell me about this.
Well, this is silver, real silver, not chocolate. And I believe this could be the future of money.
The future of money?
Well, do you know it's the past of money?
Yeah.
Because do you know the very first metal that became a coin was silver?
Not copper.
Silver. Copper was forged into silver by people who wanted to scam people. So people think inflation is a natural form of, money depreciation. They think it's normal. Inflation is theft. Because how inflation first started was this was the first metal that was used for coins, real money, not like fake money now where a pound isn't gold and a dollar isn't silver. But back in the day, this was the first metal that was coins. There was other forms of money before coins. And then when times were hard or people wanted to get an edge, they would melt copper in just a few percent into silver. So it would be worth 3-4% less, but you wouldn't notice. And that's what inflation is.
So what's a better investment, silver or gold?
To start investing, silver is good because it costs a lot less than gold. I mean, you need a lot of this to equal 1 troy ounce of gold in value. So let's say you've only got hundreds or thousands, not tens of thousands to invest. Silver is better because one of these, I don't know, maybe five or six coffees just to get a coin. You can ask your friends, family and relatives for birthday, Christmas and anniversaries to stop buying you socks and pants and start buying you silver. So entry-level silver's great. Also, recently, there was a kind of decoupling between how silver and gold track each other. So in 2005, gold started to soar. And previously, gold and silver would track at the same distance between each other.
I actually have it.
So tell us how much exactly.
It was a 60-to-1 ratio.
Right, so gold would virtually always stay 60 times more than silver. So if gold soared, silver would follow it at a 60-to-1 ratio. Then it got decoupled, which meant that the prices aren't as linked anymore. So gold soared 2005, 2008. In fact, some of the banks of America are calling gold to go to $3,000 a troy ounce. It only just recently peaked at $2,000 a troy ounce. So that's big growth. And so because of that, gold went wild, but silver stayed low compared to gold. So, my mentors in silver and gold and a lot of precious metal experts are predicting that it'll go up a lot and that it's undervalued compared to gold. There's other benefits of silver. Now, whilst there is more of it than gold, this has more utility. So with gold, what do we use it for? Jewelry. But in every battery, you need silver. And so silver has a wider usage. So, of course, if the electric car movement gets big, a lot more of this is going to be needed to be used. So therefore, you could have increased demand based on supply, which could push the price up. I think there's silver in your phones. I'm pretty sure there is, probably in the battery. So yeah.
It's roughly today 50% of all silver is used for industry. So making things.
Right. That would be probably mostly battery, cabling, etc. Yeah. Whereas I can't imagine any gold is used in industry.
No, far too expensive.
Yeah.
I don't really know how useful it is either.
Yeah, I'm not a physicist to know the conductive properties of silver. I know that it gets you excited when we get it out for content. And the great thing about it is it's accessible and liquid. I mean, gold is accessible and liquid. It's just more expensive. But silver is very liquid. You can trade it, at or around the spot price. It's not volatile compared to other asset classes. And so actually, the reason I predicted that this could be the future of money, even though it's the past of money, is because real money is getting wiped out by inflation. Since lockdown 2020, inflation, the figures that they'll publish, 25 to 30%. And I reckon if that's what they'll publish, there's more they haven't told you. Because in the basket of goods that is the measure of inflation, often, for example, your mortgage payments aren't in the basket of goods that they track inflation. But if you've gone from a fixed rate of 1.7% to a variable rate of 6 or 8%, then your lifestyle inflation has doubled or tripled, hasn't just gone up 25 or 30%. I have a rule when thinking about inflation for my own life. If the government say it's 5, I think it's 10. If the government say it's 10, I think it's 20. So if they're saying 25 to 30% since lockdown, then maybe it's 50 to 60% since lockdown. So that means you can buy about half with the same money. But this has gone up since lockdown. I mean, do you want to have a little look? Maybe look at silver price 4 years ago compared to now, or just look at silver price over the last 10 years or something like that.
Okay, so in 2008, it was $14.99. This is dollars.
An ounce.
Silver
was $15 an ounce.
Yep.
In
2008.
Yeah.
It then takes a big hike through the financial crash. So 2011, it sort of peaked in the last decade at $35. From 2019, it's just over $16 an ounce. In 2020, it jumps up to just under $21 an ounce, again, during uncertainty.
Okay, so let's go there. So it went from $15 an ounce to $35 an ounce in the crash.
Yep.
So let me ask you, I reckon you know this. Why did silver almost double when most asset classes went down 30% in the crash?
Well, people lose faith, I think, in government, in real money.
Fiat currency.
Correct.
This is real money.
Yeah.
Yeah.
What most people would deem real money, cash or digits in their bank account.
Yeah.
I think people lose faith in that, and then that assets start going down.
And then why does this go up then? What's the relevance of silver if people have lost faith in banks and money?
Well, it's real, it's physical, and it has utility.
And if cash gets hyperinflated or cash goes down a lot in value, because there's countries like Cyprus and Zimbabwe where in days their currency has gone down to virtually zero, what else are you going to use for money? I mean, you'll have to go back to barter otherwise. And bartering your shoes for the meat that you butcher, for the candles and the bread, and bartering all that in a modern society is virtually impossible. We need a form of money to increase speed and reduce friction. So that's why I predicted at the start of this content that this could be the future of money. There's enough of it for supply. There's probably not enough gold for us to turn it into currency, but there's probably enough silver. And look, I'm not an oracle, don't have a crystal ball, but if your money keeps going down in value, your cash, and you see it going down in value hard, one day you're going to go, this doesn't work for me anymore. This isn't sustainable. I have $10 today and it seems like it's going to be worth $5 in a year or two. I'm not using this as money anymore. Because if you think about money, for us to have paper and exchange it, there's one thing that we need to have in it.
Belief.
Yeah. So what's a level above belief called? What is it actually written on the notes? In God we trust. Paper is only worth anything, because it's worth nothing, by the way, and even the polymer notes are worth nothing. It's only worth something if we trust it.
Right.
Which is the higher level of belief. As soon as we don't trust it, i.e. we know it's worth nothing, or we know it's going down a lot in value, we won't use it anymore. And then we use this, because we know it's real.
So if it's real, and this takes up a lot of space, and that could be stolen, and I could slip one of those in my pocket.
But your cash could be stolen.
True. But where do you look after it? Where do you keep it?
Well, I'm not telling you where I keep my silver.
where might somebody else?
I'm not telling any of you. Nice try. That's why you're really doing this content with me. You want to know where I stash mine.
I'm just taking one coin each time until you don't notice.
Yeah. Well, I mean, here's the irony, right? Where do most people store their cash?
Well, most people don't. It's in the bank as a number.
So most people store their cash in the bank.
Yeah.
That's where they store it. And notice I said store, not save.
Why?
Because savings are degrading. Because savings go down. Inflation is higher than interest historically. Even when interest is high, the banks don't give you it all. So your money goes down in value in the bank. So savings are degrading. This goes up. So a bank is a storage facility for your money. So you're saying, where do I store this? Well, I think it's safer to store this at home or in another city, in a safety deposit box or somewhere secure that only I know. I think that's safer, or in a vault that I believe is safe. I think that's safer than putting my cash in the bank, because the banks can immediately lend it out. They can invest it. They can lend and invest 90% of your money. You believe it's insured, but is it? And if you look at the terms and conditions of your bank account, they can hold and basically freeze your money whenever they want. Essentially, your cash in the bank is now a government asset.
Do you have to buy it physically, or are there like funds you can
ETFs.
invest in?
Yeah, you can buy gold and silver in ETFs, but for me, it kind of negates the point of it. Isn't the point that it's real? And gold and silver over time in ETFs don't do as well as the S&P 500 or the FTSE 100. So why wouldn't you just, if you're going to invest in something that you don't hold on to physically, why wouldn't you invest in the S&P 500 or the FTSE 100? Because, I think you're pretty safe to assume they'll do 8% a year. And they're also very liquid. So for me, the point of this is that you've got it, that it's real. Because if there's a recession, depression, and crash, anything that you don't physically hold is at risk because someone else has got it. You can buy it physical, but have it stored in someone else's vault. And you'll pay, 1% of the value of it in vault rental. But again, who owns the vaults?
The banks.
Who's got your money in the banks? The banks. So, why would you want to take that risk? And the great thing about this, unless you do bloody content on it like I am, is no one knows you've got it.
Yeah. Yes.
And you can own it as a company asset. So there's loads of other benefits of holding silver.
What are the
gold.
tax implications of holding this in your company?
Do your research, but I'm pretty sure there's no capital gains tax on silver. You can claim the VAT back on silver. There's no VAT on gold. It depends on if you hold it in a company or personally. If you hold it in a company, it's pre-tax. If you hold it personally, it's post-tax. You can own silver in a company just like you can put the cash in a company in the stock market, and it's real, it's physical. Obviously, it doesn't have an income, so there's no income tax. And you could just hold it in the company and wait till the tax laws change, because when the governments need a load of money off you, they'll close a load of the tax loopholes. When they realise all the millionaires and billionaires have left and they need to attract them back, they'll open up the tax loopholes again. Like Portugal, they opened up a tax loophole, brought loads of entrepreneurs in, then they shut it. Now they're doing it again. They're thinking about no tax in year one for under 35s, which I think is a brilliant policy.
So if you've got a few hundred or a few £1,000 to invest, is silver your number one choice?
If you want something that's your own, that no one can take, that you can hide, that's real, and you believe there is a recession, depression, or global financial crisis coming, and you want something easy to learn and easy to start in, and even things that can be given to you as gifts, silver's one of the best places to start. I'd say so is doing a direct debit for 100 or 200 a month into the S&P 500 or FTSE 100. But at least this is physical and real and likely to go up more as markets crash. And so many of these massive billionaires are calling the crash right now. In fact, in London, Knightsbridge and Chelsea are down 40%. Chelsea's price is back to 2016. So in 2015, silver had gone up from $15 an ounce to 30 odd. And then real estate in London started to drop significantly. Now, look, by the way, I'm not sitting here going, silver is better than everything else, because at least with real estate, you can leverage. So I have a portfolio with tens of millions, have 55% loan, 45% equity. I wouldn't have been able to buy tens of millions of real estate without the bank's money. So I don't have tens of millions of silver because I'd have had to buy it for tens of millions. There's not the leverage. And I can't use the bank's money, which I like using the bank's money. Here's one for you. If you borrow £1 million from the bank, you have the problem. If you borrow £100 million from the bank has the problem. And that's the way I like to play the banks. I've got a lot of debt with the banks, good debt. And yeah, there's a problem for them if something happens to me. And not if they lend you little bits. So silver's good for hedge against a recession, physical, protected, hidden, decentralized. We haven't talked about that yet.
Go.
What about if you like the concept of Bitcoin and you like the concept of decentralization and sovereignty and a lack of control of cancelling you know, the debanking thing. It's very real. My friend Nigel Farage, 9 bank accounts shut down. Even his family couldn't open a bank account. How's that right? That you can't even have a bank account. So, you know, they control you. They can debank you. They can cancel you. They can freeze your banks. Whereas crypto and silver and gold, well, actually, I was going to say they can't do it. They're kind of starting to do it with crypto now. I mean, they're now starting to get their claws into your cryptos, but your silver, your gold, no one knows how much you've got. No one knows where you've got it.
Just don't tell anybody where it's stored.
Don't tell anyone where it's stored. We are in a secret location. Can you see this black background? Do you know I did a piece of content with £1 million worth of gold, and we went to a secret location. We had to have security and everything. We're basically inside a vault, but where we could get an internet connection when we did this.
Damn.
Yeah, and we had to be really careful when we were setting up. Like they had to sign off what where we were filming and what it looked like, just in case there was a little bit of a color there and someone could have worked out which company it was and where we were storing it. It was really fascinating. It's good fun.
Damn. All right, let me ask you a question. Would you buy silver in a leveraged way like you do property if you could?
Yeah. Yeah, I would lever up on all assets if they were historically proven to go up.
Have you heard of the Hunt brothers?
Tell me about the Hunt brothers.
I found out today. I'm a silver nerd now, so I'm getting into it. So Nelson and William Hunt, they were American guys, son of some oil billionaire in the 70s. So they tried to corner the market of silver. They tried to buy all of it. And in January 1979 to January 1980, they bought a third of all silver.
Wow. And that must have been, if inflation adjusted, billions, surely.
Well, it was 150 million ounces. The reason I bring that up, so basically they were leveraged and they were buying futures and they were borrowing money. So they went in 1 year from nothing to a third of the market. And then by March, so 3 months, they got margin called and went bankrupt.
I was going to say, the problem with levering up like that is if you have any downward movement, you're fucked.
Yeah. That's insane.
Yeah, it is insane. And I probably would lever up a bit on silver and gold. And the thing with leverage is don't over leverage and be careful not to leverage on volatile, unproven classes. People were levering crypto. They were finding out ways to leverage crypto. And of course, because that's so volatile, that's really dangerous. So look at what the banks like. The banks like real estate. The banks used to like gold. The only reason they don't really hold that much gold now is just it reduces their ability to print money. So, and of course, there's storage challenges. So obviously when they came off the gold standard, it just meant that they could dramatically grow the economy, dramatically print money. They didn't have the cap on, because in a way, I've knocked the fiat currency system because it goes down in value. But if you can create money, you can fuel an economy. You can also fund wars. Do you know in the past, this is one thing you've got to be wary of. In the past, governments have recalled gold. They've basically made it illegal for you to hold it and called it in because they need to fund wars. Anyway, on that note, thanks for tuning in. Remember, if you don't risk anything, you risk everything. Right now, we have a banking crisis, a potential global recession. If you'd like to learn how to cash in on the crash and not just survive, but thrive in challenging times, I invite you to join us at the Moneymaker Summit Live. The link is robmore.live/money. For a very small upgrade fee, you can get special VIP tickets where you meet me personally, you'll get your book signed, there's a VIP dinner with 6 multimillionaires and bonus money mindset sessions, as well as the special 3 days on getting your tax bill down, your income streams up, my 8 stages of building wealth, my formula for riches, and much more content at robmore.live/money. The agenda, the details, the dates, and the speakers are all at the link robmore.live/money.